is up?
What's up?
What up?
Welcome back to another episode of How to Invest in Commercial Real Estate, and we have a fun one for you today, folks.
Took a little bit of time off for some trips.
Yeah, some people take a week for spring break. We take the whole month of March.
No, we don't.
No, it was just a busy month. But all in all, a lot going on.
Yeah.
We initially thought we were going to have this amazing deal in Reno, Nevada teed up and ready to close. We still have not made it to the closing line. It's looking more and more every day like it's not going to happen. I would say it's probably not going to happen. All of the investors involved are going to get emails. If they haven't already, I'm sure they're going out any day.
I blame Brian.
Yeah, it was my fault.
100% Brian's fault. If it wasn't indicative by the utter domination in the games. But yeah. The deal just sometimes you have difficult people. At the end of the day, we're dealing with people, and people can be difficult. So old building, a lot of crap going on. I don't know if we'll get into all the details right now, but it kind of slowed things down a little bit in the acquisition cycle, but it didn't stop it. We've got deals in contract. The next deal closing is going to be the Aspen Dental sale. That's closing Monday, so it'll have already closed by the time this video goes out. Really great return. Happened fast, happened on schedule, a good sale all in all. I'm excited about that one. That was one we built, obviously, in Nacogdoches. We call it Nagadishu.
Texas, yeah.
Next one, we are getting into contract to sell the Burleson TLE. Another really good sale. Happy to get that one off the books. And then acquisition-wise, we just got 2 deals in Denver in contract. Aurora, right outside of Denver, kind of southeast.
Yeah, we're heading out there, in a week and a half?
Yep.
2 weeks to go take a look.
Yep.
Check it out.
We started our traveling show. Started with our meet and greet in Dallas. Saw a bunch of investors down there.
Yeah, that was super exciting, actually.
Yeah,
a little more exciting than I thought it was going to be.
Turned out great.
Tons of fun. Got to meet a ton of new people. Got to reconnect with a lot of people. You know, sometimes you just end up meeting years ago and years go by, and then it's amazing how many people came that we didn't know. Yeah. You know, we had a really good turnout. I think the next one's going to be in Tulsa, Oklahoma City area. So if you're interested, be on the lookout for that. Obviously, just trying to get introduced to as many people as possible.
Yep. Show our faces.
Show Brian's face, really.
Yeah.
For the most part.
Yeah.
Yep. What else is going on? It's distribution time. Distribution's
Let's go.
Woo! Best time of the year. Best time of the year happens 4 times a year. And we have several properties that have just... Actually, the properties that we manage and have financials on, we got those distributions out. The properties we're waiting on financials for, we haven't gotten the distributions out.
This should be best quarter ever.
It will be. It already is.
Nice.
Yep.
We got NBA playoffs right around the corner. If everybody remembers, we had the best team in the world last year.
We got number 1 seed going into the playoffs back to back. That's a start. MVP is going to be the second thing that happens, and then hopefully somebody else beats the Spurs.
Yeah, I'm afraid of the Spurs. I'm slightly afraid of Denver, and I'm slightly afraid of the Celtics. So those are the teams I think we got to get by.
It's interesting though, because the Spurs beat us 3-4, and then we beat Denver 2 out of 3 so far. We're about to play them again, but okay, we got somebody wanting to be in the show today.
All right, give it up for a new dumb mascot. All right, we're gonna put you down.
Hey.
Okay.
That's crazy.
Most episodes, she's right here, and you would have no idea. But today,
she wanted
to
on
say
camera.
hello.
We'll be on camera. Hey, everybody.
It's like I look nice. I got my bandana on.
Let's see. Well, we got a war in Iran. Jacking everything up for us.
It was more of a conflict.
Yeah, we're not calling it a war, but we definitely won it.
Yeah.
So there's
it was
that.
a war, we won.
The meme you sent today was pretty good.
But that's not doing too much to our markets right now, but it did raise interest rates probably 30, 40 bips.
Spiked them up.
So if you're in contract with a pretty decent size commercial real estate deal and your debt is 250 over the 5-year or the 10-year and it moves 40 bips, it definitely is going to impact your returns.
Yeah, and thankfully, we've already seen the market kind of readjust to the straight reopening, which is amazing. I think that's a lot of the pressure in getting the straight reopened and coming to some sort of resolution there. But man, like if you would have had to close the deal in the past month, talk about unknown risk, that just falls out of the sky. There's no way to predict that.
By the time this show airs, we're not even sure if the strait will be open or be closed.
That's right. Yeah.
So that's how quickly it's moving every day.
We may not even be able to say the word Iran. They don't recognize.
Well, their civilization might be gone.
Yeah. But crazy time to be alive. Lot going on. I think that's it for the updates.
Topic for the day. What we hitting them with?
We're going to go into the game. Sounds way more
game?
fun.
Game?
Yep,
You want
way
to do
more
the game?
fun.
All right, what do we got? What's the game?
I've got overrated, underrated.
Boom.
Oh, geez. Yeah, go hit me.
It's funny that you brought up the Oklahoma City Thunder because that's on my list. That's number one on my underrated list is OKC Thunder.
I think they're properly rated. I think they're number one.
They earned the number
properly
one seed.
rated.
You don't have to overhype it because they got a few teams right on their heels.
How about SGA? That's not on my list, but what do you think?
Properly rated. I think he has had a million opportunities to show a lesser character, and he remains to be calm, cool, and collected, not only on the court, but in the post-game interviews. A lot of these players, are very eccentric.
Yeah. I mean, he doesn't whine at the officials like some of the other guys vying for MVP. He's the most consistent 20-point scorer the game has ever seen.
Yeah, that's facts.
He is the most efficient guard, averaging the amount of points per game he's averaging. So there's so many things that I think make him either properly rated or even slightly underrated. He is a generational gift to the Thunder. He's a great player.
Yep. All right, Chat GPT or Claude or whatever.
I think it's underrated. I don't think enough people realize the power, especially of the pro version, and how quickly it's learning, getting better, and getting faster.
Yeah, we've used it quite a bit.
What do you got, Braden? Nothing?
I'd say it's properly rated. I don't know, if anything, a touch overrated. People haven't quite figured out how to use it yet, and I see a lot of stupid people made stupider with ChatGPT, and it has a way of regurgitating stupid to sound not stupid, but if you're not stupid, it's, I don't know, like some of the stuff I see in ChatGPT.
A lot of stupid.
Yeah.
That's really all I heard him say.
It's a tool that you got to use.
If stupid was going to use a stupid app and it didn't realize that the stupid app was giving it back stupid, then you would say that the stupid was stupid for using the stupid app.
I mean, it would be like in conversation or replying to things, quoting like paragraphs of Mark Twain to make your point. And people just don't talk that way. You have to use it as a tool to gain information and then regurgitate that information in your own freaking thoughts, guys. Stop copying and pasting. I don't want to talk to ChatGPT through you. I can do that myself.
All right, here's one. Braden is an expert. Rolex watches. Underrated or overrated?
I think they're overrated because there's so many amazing handmade Swiss watches. Like, people just want to buy that one because it's the one to buy. There's a ton of amazing handmade Swiss watches. That one is 100% brand recognition. They make some nice watches, but overrated.
Agree.
Okay. Being tall. Oh, wait, you guys don't know anything about that. How about the transfer portal? Since we're on a.
How do you roast us coming up with the questions?
Yeah, that's really good. That's good. Transfer portal. I think it's properly rated. I like it. I think it needs restrictions. So it's just not a chaotic free-for-all every single year. Yeah. Maybe it's 2-year deals. I don't know. But there needs to be some regulation around it so there's some certainty and you can plan.
Yeah, maximum number of transfers or something.
Yeah, it's a lot. It's a lot.
And it's really where it's hurt, I think, college sports is that you used to have a fan base that wants to get to know the players and actually pull for those players like I do for the Thunder. Yeah. I know all the players. I know how they play, and I know what they all contribute. But with college, it's a new set of players. The entire team is almost new every year. And so there's no fan loyalty and there's no family. I think it's kind of hurting fan devotion.
I think what people aren't talking about is what it looks like on a resume. When you read a resume and you see somebody bounces from job to job to job, I think that speaks volumes. When you're going to look at these players and they played at 4 universities for 4 different years, how long do you expect them to be on your team?
Yeah.
Better lock it up as long as you can.
Well, the difference is they'll have a contract in the pros. And in college, it's just a 1-year contract.
Which seems dumb.
Yeah. All right. Last one, the Masters. Is today the first day of the Masters?
Yeah.
Yeah.
Yeah. I think it's underrated. Yeah. It's one of the,
I'd like to go see
in a traditional sense, you don't have a lot of them, it's one of the oldest traditions in sports. And then golf is like singular person wise, the hardest thing to win ever, let alone that tournament. And just the cool things they have associated with it. I think it's really cool.
Yeah, I do too.
I don't know if I have an opinion on the Masters, but
You don't watch, probably, do you?
I watch a little bit of it, but I definitely don't care to go watch it in person. Whenever I've gone to the PGA events here, it's just like I'm following a bunch of people around.
Yeah.
And the golfers are like way over there.
Yeah. All right, that's it.
Okay. Let's do it.
So the topic for today is why the best real estate deals happen during uncertain times or uncertainty, which I think we're in a period of uncertainty right now. I think we have been. Number one, what does the cycle look like? What does a typical uncertain time look like? I think at first, there's panic. People don't know what to do. There's some sort of catalyst, could be a war, it could be a new president, it could be a new, illness, it could be the stock market crashing, it could be a number of things. People panic,
Which
number one.
leads to indecision, right?
And you're not really doing anything in that first stage, I'd say.
Right.
Everyone is panicking,
Yeah.
evaluating, analyzing, gathering data, whatever it is. Mm-hmm. The next phase is just like general uncertainty, right? We still don't really know what's going on. People like us are looking for opportunities. We're still collecting data, yada, yada, yada. Next phase we're going to move into is opportunity. And we've collected enough data through the first couple of phases where we're starting to see where things are going, still uncertain, but more opportunistic, right? We've
Lead to opportunity, right?
Yeah, we're maybe trending in the right direction, but we haven't breached certain critical points yet. Mm-hmm. The next one is recovery, where we're clearly on that trending upward line. People start to get back in slowly but surely. And then the last one is everyone wants in. Everything's great. It's stabilized. We're moving up. It's soaring. Everything's solved. There's no panic. There's no uncertainty. We know where we're going. It's a cycle.
Okay, how does that relate to commercial real estate?
Well, I got a couple thoughts. I mean, uncertainty in and of itself does not create good deals. What it does is it makes people make mistakes, right? Because you don't know the future, and people maybe try to guess at what interest rates are going to do, where prices are going. Also, that fear makes people make mistakes. Uncertainty brings fear, and that fear makes people do things they may not otherwise do. But a couple of the notes I have on why you might get opportunities in uncertain times is you get potentially over-levered owners. You get like in a rising interest rate or uncertain interest rate time right now, you've got floating rate. The people got these floating rates, and now their interest rates are going up, and now they're under a lot of pressure.
So maybe they have to sell.
Yeah, right. At some point, you get to where they have to sell, even though we don't know exactly where the market's going or where interest rates are going. If there's enough uncertainty, institutions are going to sit on the sidelines, and banks are going to freeze up a little bit with the lending, and that creates less competition and less liquidity, which also will put people under pressure. And with less competition becomes more opportunity to buy good deals.
Yeah, and these are a lot of the reasons we go into these uncertain times, right? And it's not, like you said, the uncertain times causing them. It's what people are doing before the uncertain times that causes the uncertainty, and then that therefore creates the opportunity.
Yeah, so we just try to stick to the fundamentals during this time, and we try to look at deals from, hey, what is our fixed rate debt that we can get today, and can we get a deal that cash flows today given that debt? Try to hedge against the rates going up, but be ready with a no prepayment penalty loan to take advantage of rates when they go down. And so far that strategy's been working pretty well for us.
I would think disciplined underwriting would be really necessary during uncertain times, right?
It's so much, right? You could be expecting and underwriting tons of rent growth and get a 5-year fixed loan, and the rent growth really starts to pop off in year 5 and 6. Mm-hmm. You were a couple years early. You didn't get fixed debt enough, and then debt goes from 4% to refinancing at almost 7%. You're in a world of hurt. Mm-hmm. So that is what's creating the uncertainty. And then that leads into our opportunity, right? Because then they're looking at a refi at 7%, where we're coming into the picture at a starting point of 7% interest. And like we said, the rent growth in our sector, at least, is really just now starting to hit the fan.
Right.
You're seeing some other sectors starting to cool off a little bit. But retail is still fundamentally very strong rent growth. So that's what we're talking about here. We're all forecasting 5-10 year decisions and business plans. At the end of the day, if you're off a little bit, that can lead to some of these things happening. And if enough of them, if enough people are making that bet at a macro scale and it's wrong, then you lead into everyone kind of panicking. And the people that are sitting on the sidelines, it's big opportunity for them. Yeah. As we've seen.
Yeah, and if everybody knows that the market is fine, that there's nothing out there that's causing fear or anxiety, and interest rates are stable, well, then you get more and more aggressive underwriting as that part of the cycle lengthens. And so, they write that underwriting, they write some growth, that seems to play out, and it becomes a self-feeding loop, and you just get a lot of competition. In order to win deals, you gotta be aggressive in your underwriting, and you gotta project like 5% compounding growth on your rents or whatever it is. We do put some rent growth in our underwriting, but I would say a majority of the rent growth that we've seen on lease renewals has been just upside over and above what we forecasted. We like the deal to work on its own in today's terms. That's really, really important.
You think some of that happened in multifamily over the last 10 years? There's a lot of...
For sure, after COVID, when rates went, we had this run in the market for several years of everybody making money on multifamily with rates in the 4 to 5%. Yeah. And then after COVID, the rates literally went sub 3. And so now every deal makes sense. Right. Every seller can make sense to sell, and every buyer can make sense to buy.
And the developing pipeline is kicking up too during this time, because the units you need. I mean, if you're just looking at these reports, we all need tons of multifamily units.
And it's like this. It was like a perfect storm, because you had rates coming down, but you had inflation going up. We had a couple of years after COVID where inflation really spiked. So now rents are going up. Rents are going up like crazy. Debt is at the lowest level in our lifetime, and people got stupid. And I think there were billions of dollars made for those that got in and out. But if you took on any type of floating debt or bridge debt or construction debt when rates were super low, thinking that you're just going to continue with the 8% a year inflation rent growth, well, those people now are having issues. And we even have a big one here in Tulsa. A big operator is just totally collapsing. The portfolio is collapsing because I'm only going to assume there were mistakes made during a period that just seemed like you couldn't lose.
Yeah, and it's hard to have outstanding rent growth like multifamily had, but also deliver the amount of units they did and still have that rent growth. The amount of competition you're bringing to the marketplace, it not only slows your rent growth, but it slows your absorption. Yeah. So even though we need these units, the competition in the marketplace right now has really stagnated. And again, it's all timing, right? Like if you got it in the very beginning, you saw a ton of rent growth, but as soon as those units start to came online, then it was it was a lot more competitive.
Yeah.
Luckily, it's a lot harder and more expensive to develop retail, and we haven't seen that sort of competition the past decade or more. People really aren't building new retail centers because a lot of it is anchored in big box, and a lot of that you need like city or state incentives in, and it gets very hairy.
Yeah, I mean, think about what we're buying on the retail. We have not been perfect in this strategy, but we are typically buying on frontage roads with very high traffic. And there's not, I mean, those kind of
inherently
sites,
irreplaceable real estate.
Yeah, it's not like that. There's just a ton of vacant lots on good frontage with super high traffic counts in these cities. All that's been done over the last several decades. And so we're buying centers that are maybe 10, 20, 30 years old, but that are where we need them to be. Think about
at half of replacement cost.
Yeah, and you can't just go build retail 4 blocks off the main road. You have to have the eyes on it. But multifamily, you can put it anywhere because people don't mind driving a couple blocks off the road. They may not even want to be on the frontage. They want to be kind of back in a quieter neighborhood. So you can put apartments anywhere, and people are still doing that. Retail, though, is limited to how much they really need population to swell around an area before it makes sense to put really core frontage retail. So I think we're in a good spot in a lot of the centers that we have to see continued rent growth.
A few historic examples. We'll start with 2007, 2008. I don't know if we need to go too far back. We've got a few examples. That was obviously over leveraging home loans, right? Like you could just write whatever income you wanted. Market crash, people over leveraged. If you would know where it would be, like if somebody said, hey, by the time 2012 comes around, you're going to be freaking killing it. You would have bought everything possible, right? The next one, COVID, right? Like this unknown illness comes out of nowhere, literally shuts the world down. It dips a little bit. Everyone thinks, oh, that's like the first phase. It's got to go lower. It's got to go lower. So I don't think a lot of people really got in before the market bounced back. And by bounce back, I mean surpassed where it was at, and then just kept going. And then the next one, same thing with that. If everyone knew like that, hey, that 10% or that 8% dip, that's all you get, everyone would have bought. Everyone.
Some people just sold. Sad.
Yeah. The next one is, the most recent president up until now. I think there's been a lot of just like macro global uncertainty. And I think you still see a lot of pause of like, what's going to happen? Are interest rates going to go down? Are they going to stay the same?
Who are we going to invade next?
Who are we going to kidnap? What strait are we going to
What oil are we going to take next?
Yeah. And Strait reopens and it's immediately kind of like stabilized and recovering a bit. So you don't know, but you do have to be aware to these cycles to make the most out of your purchasing power. At the end of the day, when you can time your investments, it makes a lot of difference. You can earn 8, 10, 20% just on good timing and paying attention. It's not luck. Anyway, I think that's it.
Yep.
So we will see you guys next week on another episode.
Next time.
Okay.